Welcome back, boys, to the $500 Robinhood account challenge, where we try to grow $500 in a Robinhood account using day trading, swing trading, options, and all sorts of trading stuff. If that sounds interesting to you, smash that subscribe button like you're panic selling some puts, and I promise I won't let you down. So without further ado, let's take a look at my current positions and most recent trades. And here's my current account balance, which is up about 12% over the last month, which is pretty good if I don't say so. If I do say so myself. Do note that I've added $250 recently, and I've told you guys I'm going to be doing that on a monthly basis. But this guy was not very happy about it, saying that I thought the whole point was not to add money. And it made me realize that maybe you guys don't totally understand why I'm adding money each month, or at least the power behind it. So let me show you. Here we're looking at an investment calculator where we can estimate our projected returns over a certain amount of time, and I'll put that in the description so you guys can toy around with it if you want to. So let's say we start with $500, which we're doing for this challenge, but we don't add anything at all every month. We add nothing. We're going to be doing this over the hypothetical time period of a decade with 30% return each year, which is pretty good. And if you hit calculate, over a decade of really consistent, dedicated, good trading, you would end with almost, but not quite, $7,000. Which, if I traded that hard for that long and ended with 7K, I might jump off a cliff. So let me show you why I add, this is the reason I add money each month. Let's say we add $250 a month, which is what I'm doing for this account challenge. Same length of time, a decade, same rate of return, 30%. But this time we end with $134,000 with a total contributions adding up to $30,000, which is awesome. I don't even feel like I have to say anything. I think this speaks for itself. If you guys add money to your accounts on a regular basis, like take a percent of your paycheck or whatever and just throw it in Robinhood, I promise in a decade from now, you'll come crawling back to me with fistfuls of cash, kissing my toes and being like, thank you, Adam, you are a god. That was a little much, but I think you get my point. So let's move on to my most recent day trade, which made up most of my gains over the last month. This charting software that I'm using is Thinkorswim by TD Ameritrade. It's completely free. All you have to do is create an account, and I will put a download link in the description for you if you don't have this set up. It's pretty awesome. It has all the charting tools you'll basically ever need. A few things to point out about this trade. I like to see that the price action busts above the 9 EMA or the exponential moving average, and the VWAP, which is a volume weighted average price. If you don't really know much about those, I'll put some more information on those in the description for you to check out if you're interested. But I like to see that it busts above those, goes back down, retests them, especially the VWAP when it's going back down, gets rejected, it bounces off, and continues to move upward. And that usually is a good enough buy signal for me. So in this case, that's exactly what happened. Oh, it's worth noting though, I will start out in either the 1 minute or the 5 minute or 15 minute chart. It doesn't really matter too much, but what does matter is that when I decide I want to buy, I want to check the other time frames that I'm not in. So if I'm in the 5 minute, I'll check the 1 minute and the 15 minute to make sure they're all speaking the same language, to make sure they're all saying buy. If I'm in the 5 minute chart and it says buy, but the 15 minute chart does not, I will not enter the trade. I want those three levels to be telling me buy when I'm day trading. So you can see here on the 15 minute chart, it busts above, goes back down, tests the VWAP and the 9 EMA and gets rejected. And at this candle, this is where I bought in. I bought a couple out of the money SPY calls for this one and sold right before close because I didn't want to hold those overnight. They expired the next day. My total risk when entering the trade was $44, which meant if everything went against me, like suddenly just a big fat candle, just massive, I would lose max $44. More realistically, I'd probably lose less than that because I would close out of it if it were to break below and close on the 50-minute chart below the VWAP. So $44 at the time was 6% of my account, but more realistically, I would have closed well before 6% was lost if possible. I want to keep my losses controlled. But regardless, it turned out for the best, and I ended up making $56 on the trade. So for those of you who are kind of new to options, let me show you what I'm talking about. So on SPY, the S&P 500 ETF, you'd hit trade options, and I like to do options when I'm day trading that have an expiration in the near future just because they're cheaper. It makes it easier to know what dough I'm putting up, what skin I'm risking in the game. I do want to note here really quick, when you look at this 288 call, you'll see that it says 387% for the day, and then you move more in the money, or towards in the money, and it says 355% for the day, and then 347% for the day. So it's less and less percentage. So logically, you can conclude that out of the money options have more leverage, which is mathematically true. So they're really nice because you can put up very little capital and have a lot of leverage. So they're really fun to day trade. Anyway, so if we're wanting to buy a couple of these 288 calls, I would tap on it, I would tap 2, and if I wanted it to get filled immediately, I would enter the ask price. So that spread you're seeing there, the 0.19 and the 0.20, that's the bid-ask spread. I would enter the ask price if I want it to get filled basically immediately, as long as the price didn't move too fast. So I'd enter 0.20 and I would hit review right here and I'd send it off and it would get filled about immediately. Now, if I'm selling it back to the market, I'm done with the trade. Let's say hypothetically I'm doing the same thing, I'm selling it right here. I would do 2, and I'd want to enter the bid price, the cheapest price, to get it closed immediately. And in general, I want these to be open and closed immediately if I'm day trading, because I'm moving pretty quick. Keep up, baby. So I'd enter 0.19 and hit review, and I'd send it off, and it would get closed just about immediately. So that was my day trade on the 28th, which gave me some good return. Now I want to talk about stop losses and how I use them and how I think you should use them. So this is one of my day trades that I'm in, which is Coca-Cola, and I currently in 2 shares at an average cost of $46.88. I'm actually kind of up here. I was entering this quite a while ago, but got stopped out, and I just re-entered it because I like the direction it's going, which is up. So I'm in at 46.88. So normally what you're going to do is put stop losses below levels of support, or where price action bounces off of multiple times. So you can see there's a pretty obvious level of support down here around the 44.40 mark. So I want to put my stop loss a little bit below that. So let's say we're going to put it around 44.29. Okay, or we'll do 44.25 to keep it easy. So if I want to see how much I would lose if it were to go all the way down to that, you're going to hit your middle mouse button, click on this diagonal trend line here, and click wherever you entered, which for me was around 46.80, and you can go all the way down to where you want to put your stop loss, which is 44.25. That's risking $2.56 a share. So if 5% of my account is $41 and I'm risking $2.56 a share. In order to figure out how many shares that would be to risk 5% of your total portfolio's worth, what you do is you take 5%. How do I put this in English? So you're risking $2.56 a share. And if $41 is 5% of your account, you divide that by $2.56, you get 16, which means you're risking 5% of your account if you buy 16 shares and set a stop loss at $44.25. Now, if that was a little confusing, I'll put a little bit of a formula. I guess I'll whip one up for you in the description so that you can see how many shares you could buy with a certain stop loss to risk a max of 5% of your account. So now that boring nonsense is over, let's say we're going to put a stop loss there. What I like to do first is I like to create an alert on Thinkorswim. So what I'll do is I'll right click, I'll click create alert, and we'll do at or below $44.25. So now if it dips below that, I know it's hit my stop loss, but we haven't entered a stop loss yet. So first thing we'd do, or second thing we'd do, is go to Robinhood, and to enter a stop loss, you'd tap on the ticker you're interested in trading. You would click sell or tap sell, go to order types, tap stop loss, and do 44.25. So now, and you can set it for, it can be set for 90 days total. And we're gonna say we're selling, let's say we have 8 shares in the trade and we wanna sell 8 if it hits that stop loss. So we type 8 and you review and send it off. And now that you've done that, if it hits 44.25, it'll automatically exit you from the trade as long as it's during trading hours, which is awesome because now you can set your stop loss, you enter the trade, set your stop loss, and you just walk away. And now you can be stress-free because if it dips down that low, you're automatically out. No big deal. Find something else to trade, you big dumb. Another thing I like to do with swing trades is I like to average up. If things are going in the upwards direction, I like to continue to buy more and more into my trade. So I might set an alert that's a little bit above where it's currently trading at. So I'll right click create alert, and it'll be at or above 47.60. So now if you have the Thinkorswim app on your phone, you'll get notified if it hits that point, and you can buy more shares of this ticker. There you go. Now you don't even have to watch it. If it goes too low, you'll automatically exit and you'll get notified of it. If it goes high, you'll get notified of it, and you can buy more shares and reset that alert a little bit higher. Ta-da! So that's all I feel like I want to talk about this week. If you have any questions, let me know. If you feel like I said anything that was incorrect, let me know as well, because I do that sometimes, believe it or not. Otherwise, I'll see you in the next one.